Hey everybody, Jake here at TrendSpider to go over the weekend video update into the last week of August, starting with the broad market charts as always, and then going into some individual names. Starting with the S&P 500 SPY ETF. What a week. I mean, you had big moves down, you had a huge move up on Thursday, and then you've just got this like apocalypse candle here on Friday that just absolutely took out literally the entire week of price action. So we actually hit a higher high on Friday from Thursday, and then literally took out all four of the candles from earlier in the week, closing way down here at 405.31. You can see here if we anchor the VWAP from this July 14th pivot here, you can see that this was the area that would have been an area to watch, and price didn't even flinch, just kept continuing to move down throughout the day into the close on Friday. So really just an absolute brutal end to the week, closing at the low of the week. And you can see here on the weekly chart, we were highlighting this broadening formation that ended up having continuation after a pretty bearish candle last week, right at this broadening resistance zone. And you can see here just a really strong follow through going into this week. So we'll see, what happens next week. But the main area that, I think that you want to hold is simply just this 400 level. So you have a previous kind of pivot here right around 400. So that's one reason, but also second reason is just a very psychological area right around 400. So 400 is the area to definitely watch going into next week. If you anchor a VWAP from this low from June, you'll see here that VWAP is right around 395 or so. So if we do break through 400, this area, this VWAP would be the area to watch. And as I mentioned, right around 394, maybe even a little less than that, 393, 50. But mid 390s, if we do have a strong continuation next week, would be a really crucial area to hold for the S&P 500 SPY ETF. Now the Qs, very similar stuff. We had this previous area that held pretty well throughout the week. Previous resistance from June, act as support, barely missed support back in August 9th. We retested it this week, held pretty well, had a really strong move on Thursday to the upside, almost filling the gap around 322. And same thing. We hit a new high on Friday, and then just a new high for the week on Friday, and just absolutely took out all four of these candles, breaking down through this SR flip zone. So all in all, just a really, really tough week. So if you anchor a VWAP from this low here, you'll see here that you do have a VWAP right around 300. So interesting that both the Qs and SPY are nearing psychological levels below 400 for SPY, 300 for the Qs. And then you can see here on the weekly chart, we've got continuation down from last week as well. And as I mentioned, that VWAP below from the June low is right around 300, give or take. So that will definitely be not only a technical level, but a psychological level to watch going into next week. IWM, another one that just, and that's the thing. As we go over these names today, literally every stock has the same candle today. I mean, every company that we're going to look at, there was really not a lot of hiding places with this move on Friday. Everything pretty much got hit pretty hard. Same thing here. The main thing I'll point out here is the VWAP zone that we have been talking about the last couple weeks. Failed to get above it. Couldn't even retest it this week, and then just absolutely brutal candle on Friday. So going into the week ahead, if you anchor a VWAP from this low here, you'll see this VWAP is right around 187. Let's just call it 187, 188 below. So we'll see if that area holds. But the main thing that we talked about last week is, even potentially retesting this previous resistance zone below, which is way down here in the low 180s. And remember, this is a function of time. If this takes a while and continues to grind down, this thing can grind down in the 170s. But if we went straight down next week, the area below would be the low 180s, right around 180. So that would be your main area to watch below for IWM. Now, Bitcoin, interestingly enough, definitely has had a pretty big drop over the last week or so, but actually figured Bitcoin would have a bigger drop than it has so far. When we have pretty weak price action going into a weekend where crypto's still crypto markets are still open, sometimes you do get a pretty strong move to the downside into the weekend. Remember, I do these videos on Friday, so you'll just have to track price action over the weekend if you watch this video over the weekend, because we can't really update it over the weekend. We're doing it right now. So there's a couple things to look at. On the weekly, you've got this longer term area of support. So the support zone starts back in 2015. You can see here that we still are trading right at the support zone, but also notice here you've got a potential bear flag. So any chart that you're looking at, you always have to see both sides. You have to see both perspectives. What are the bears looking at? What's the thesis on the bull side? And I'll tell you, bull thesis is simply that we're still barely holding on to this longer term support zone, this diagonal trend zone. And the bear thesis is simply just this pretty textbook bear flag here that a lot of people are watching. So all in all, we definitely are in a pretty make or break spot here. If we continue to break down, if we break down through 19K and close through 19K on the weekly chart, I definitely think things could get pretty ugly. But as always, you have to stay very conditional. If this happens, then that happens, and just take price action as it comes. Each new tick of price action is new information, so you have to take that information and see what it is and react to whether stay with your thesis, change your thesis. There's nothing wrong with changing your thesis in the markets. You get new information, you have to act upon it. Whether that agrees with your thesis or not, you definitely just can't keep the same thesis because you want to, right? Price action tells you different. Change your views. Now, going into some individual names, we'll start with NVIDIA. And like I said, every candle on Friday is the same. Just brutal day on Friday. The main area to watch below at this point is your gap below here from back on the 16th when we gapped up. So that gap fills right around 158. And based on this candle today on Friday, it would be shocking that we don't fill at least the 158 gap below. With this big of a candle, wouldn't really shock me to see like an inside day on Monday as well, but we'll just have to see how that plays out. And then on the weekly chart, we talked about this last week where we've got potentially inverse head and shoulders. And the left shoulder down here is right around 155, 156. So we are entering that potential right shoulder area. If we break down through it, then we break down through it, and the potential inverse head and shoulders is invalidated. It's really just as easy as that. If price action's saying otherwise or invalidating something, then you move on and you take what's in front of you. So all in all, still holding that right shoulder barely, but if we can close in the 155 to 156 area, I do think this could still be valid going into the end of next week. And then next week we do have the monthly candles to look at. So that's always a fun time for kind of a longer term view. Going into the next one, we've got Tesla. Tesla actually was holding relatively well this morning, and we retested this previous resistance zone up here, and then pretty much just bad news the rest of the day. So you can see that we technically did close below this, if you want to call it like a symmetrical triangle type formation, maybe a little bit of a pennant. We did close below that, so not exactly the most bullish price action here. Remember, if you are looking for gaps, turn on the gap detector. We have a gap way down here in the, this is weird to even talk about, 250 area, because I don't even remember what this gap was before the split, but it just sounds weird saying 250 on Tesla. But that's where the gap is, right around 250 below. And obviously this is post-split, so that's why we're talking in these lower numbers now. Now on the weekly chart, I really there's not a lot to go off of here. I mean, you have continuation down from last week. You've got a new low on the week from last week, but we're still holding this first week of August or second week of August low here. So if we can hold above around 280, that would be. And sorry, it is so weird saying 280 for Tesla, but 280 on Tesla is where you need to hold for next week. So definitely keep that area in mind when you are looking at the charts going into the week ahead. And it's simple, just basic pattern price action analysis. Just previous low here. If we take it out, probably not what I'd call the most bullish thing for Tesla. And remember, all you have to do is make a horizontal line here, right click, create an alert at this line, and choose how you want to be alerted. Do you want to be alerted when it actually closes and breaks through this line? Do you want to be alerted when it touches anywhere within this purple area? That's what's nice about the alerts on TrendSpider. You don't necessarily have to be staring at the screen all day waiting for 280 to be tested and then, take action. Just put an alert, set it, and then you'll get an email or text when that alert goes off. So make sure to utilize the alerts, especially if you don't have the ability to be in front of the screen at all times. Now, moving on to Amazon. Amazon here, talk about gaps. We got them here. Huge gap below from earnings. This gap fills around 123, give or take. But let's turn that off and just kind of look at what we're dealing with here. So you can see here that we did close below this trend zone, not necessarily the most bullish price action, especially with Thursday kind of having a pretty strong move off of that area. And a big thing here is when you're using the volume by price. Obviously, because you have a price gap, you're not going to have much volume. But even down here when we don't have a price gap, you still don't have a ton of volume below. So, there is a volume gap, but that's because there's also a price gap. You can have volume gaps without a price gap, but with a price gap, you're always going to have a volume gap just because there was no price action there. So all in all, we are moving into the gap below. We broke down through the top of this gap. So that was kind of an area that I was watching this week. If we could hold the top of this gap, probably looking decent. But if we break below that gap, we do have break below the top of the gap. We've got that huge gap to fill below. So not the strongest price action here. If you remember looking at the Qs, IWM, S&P 500, we didn't even get to this resistance here from the top here back in November. We drew this line, this zone pretty much on the SPY and the Qs from this point, and at least we tested the resistance zone. Amazon couldn't even retest the previous resistance zone, so definitely some weak price action here and just a brutal candle. So we'll see what happens next week, but you do have that gap that fills below right around 122.50 to 123. I'm not going to speak in exact increments. I mean, gaps do have exact price levels. If you really want the exact price level here, it's 122.84, but I would just say 122 to 123 is what you want to watch below if we start accelerating through this gap. Now, moving on to Microsoft, another one that just got absolutely annihilated on Friday today. So same thing here, and this is a great example using the volume by price tool. So remember, there's different areas that you can anchor the volume by price. I can anchor it from this swing high here, and notice that there's just a lot of volume kind of everywhere. There's not it's not as easy to see big areas of kind of liquidity and not very liquid areas. But if you anchor it from the low here, notice here we had this huge volume gap. And a lot of the time, I want to anchor the volume by price from the swing low once there's enough price action, right? I wouldn't necessarily use this swing low as the anchor point. The anchor point is just simply where I'm starting in measuring the volume here. So all these volume bars on the right-hand side, that is where volume has occurred since this low on June 14th. And that's what this dashed line is. That's just where I'm starting that area. So notice as I move it, the volume changes because we're measuring it from a different point. So if we do it from the swing low here, you'll notice that, look, we had this huge volume gap. There was no liquidity here. There wasn't a lot of people that have, transacted shares in this area. So there's not a lot of friction for price to have to move through. And that's why you get these huge, moves through these gaps, both on the upside and the downside. In this case, on the downside, we just moved right through, almost right down to this next area of volume below. And so definitely use the volume by price tool. It's a great tool on TrendSpider. And the main thing that makes it unique on TrendSpider is just simply the ease of moving this anchor point. A lot of other platforms, you have to go in, type in the date that you want to start the measurement from. That's inefficient and just kind of an extra step. Here, you just move it around and say, okay, what does the volume look like from this point? Or what does the volume look like from the high here? Where is that volume? Where has that occurred? So notice here, we only have like 8 9 days here. So you can see that the volume by price is kind of a little clunky. That's why I don't really like to use the volume by price if there's not a lot of price action yet. But here, we, since June 14th, there's a lot of price action, so I don't mind anchoring it from this low at this point, and that just gives us some pretty interesting areas, and that was a great area to kind of spot this volume gap if we did start to move down, and we moved down very, very quickly through it. Now, going into ARK, the old poster child of the bear market. Still a pretty strong bear flag here. So we've got this bear flag forming. It's been forming now pretty much since May. Very strong downtrend. So here's your kind of flag pole, if you will, this move down. Here's your flag, the support and resistance zones. And we're getting very close to potentially getting to the next leg down here. So, that is definitely something to consider. If we break down much further, low 40s or upper 30s, this setup's definitely going to have a continuation to the downside. And if you look at the weekly chart, you'll see here that this area anywhere from around 33 up to around 38 has been a pretty strong bounce zone in the past. Notice that we bounced here back in December of 2018. I'm just using a red circle because that's what popped up, but this was technically a bounce, not a move down, but bounce there, even had the bounce here. Once again, we bounced right around 35 all the way up to around 53. And now if we continue down, then this would be definitely a logical place to watch for potentially some bids coming in, or at least maybe supply drying up a little bit. But that's still down, 10 to 20% from here. So not the most bullish setup here if we break down through. And that's how you have to look at the market. If that happens, then this happens. And you'll keep your trading a lot more logical, a lot more conditional, and you're not saying, well, this is going to happen. I see a lot of people on Twitter saying, well, when we do this, when this happens, when that happens. I'm not Nostradamus. I don't know what's going to happen even in 5 seconds, right? So all of this needs to be conditional. If this happens, then that happens. Or if this happens, then I start looking at this direction. So just keep things conditional, and that really can help make your trading a little more systemic, and just your analysis too. A lot of the stocks that I post, almost all of them, I'm not trading actively. I'm just posting them, for people to look at. So, I still have to go with if then, even if I'm not trading, a chart that I'm posting. If this happens, then the VWAP is the next area to watch below for potentially support. So that is definitely a great way to look at the markets, and may be helpful for those that maybe put a little too much emphasis on this will happen rather than if this happens. But that is all I have for this weekend analysis. Hopefully it was helpful. Hopefully everybody had a great week. Remember, if you do enjoy these videos, please like and subscribe. And we have a lot of updates and new features coming in September, so I'm excited for you guys to check out those as they start coming out. And remember, we do have a 7-day free trial. If you want to try out the platform, you want to try out the back tester, the scanner, automated analysis, all of these different things, raindrop charts. Give it a try. If you don't like it, you can just cancel the subscription before the day that you have to pay. So you don't have anything to lose trying out the platform. We'd love your feedback. If there's something you really like, let us know. If there's something you really don't like, let us know. We're always trying to improve, and customer feedback is greatly appreciated and always encouraged. So everybody have a great weekend. Thanks for listening in, and we'll talk to you soon.